27th of Feb 2023. Some important, interesting setups as always every morning, and so I thought let's just look around. What the heck is happening? Is this market about to break certain levels? Can we really see a short-term blip? So as I switch to the hourly chart of the Nifty, we are attempting to understand whether this most recent fall here is a 5-wave decline. It can very well be. You can have wave 1, wave 2, then wave 3, wave 4, and possibly doing a fair. And the interesting part that I noticed is this first wave is exactly equal in size to this fifth wave over here as of today. And so that makes this very interesting that this is exactly the level close to 17,300, which is sort of a point where maybe we can complete a 5. Now, there is some internal subdivisions. Now, if we actually think, well, 5 is this 1, 2, 3, 4 is the fifth over. There could be one more dip. I'm not ruling that out. And then we complete 5 and come back. Or are we done here? So this is a very short-term structure. And if we actually able to do that, then we'll start looking at what is happening on the higher time frames. Like for example, can we actually complete wave Z of a complex correction through this entire move? The question becomes then where is wave Z? Because this has been a 3-wave up, 3-wave down. So it's like ABCX, ABCX, and then you have another one. The only way I can do a wave Z is if I say this is ABC, or given that this is 5 waves, or then maybe this is not 5 waves, in which case the marking I've done here where this is an X and an X can also be true. So these are multiple unfortunate alternates. I wish I could only say there is one outcome. But we are going to watch this level to level. The first thing is going to be watching where a 17,300 holds. Remember that 17,300 is also going to be the monthly average, which is somewhat close to here. Around 17,274 is the reading today. And are we going to close below that tomorrow? Because tomorrow is the last day of the month, and breaking that would send further bearish signals. On the weekly chart, we are at the lower Bollinger Band for the Nifty, which is at 17,300, almost, 17,290. So very, very close. And then what's really interesting is something I've been watching for many days, and I think I mentioned it in last week's video, is this neckline. This neckline for the mid-cap index, is it going to hold or is it going to break? Okay, so where are we right now on this? Well, we actually trading below it. And will a one-day trade be a break, or will it be a false break? Or will we manage to recover by the end of the day and close above? It's going to be important to watch. These are the signals that we are going to be tracking, because that's what tells us either that this is a basing formation, because we can see this large triangle here. So when you get a triangle, the last move can sometimes be a throw under, shakeout, and then turn up. So that is a bullish scenario. The bearish scenario is that, well, you broke this neckline and you're headed all the way down. And you've got to get an answer to that. These are the two possibilities whenever you reach this kind of a pattern. But we've hit this low so many times that I would actually have liked to see it hold as a support, because we held it once, twice, thrice, and this is the 4th time. So 4th time breaking, but because it's held so many times, you want to really be sure it's broken for good and not just a temporary break. And even if markets do bounce, we will be watching whether the bounce is impulsive, because if it's not, then it fails at some kind of a retracement and starts down again. So that's again another angle to the whole thing. So we're going to have to manage this trade in the very, very short term. The case is good to complete something, because we've been marking this, I think, for the last couple of months as a complex correction, ABCX, ABCX, ABC. And if I actually stick with that thematic, then why shouldn't we simply complete something like a Z in C and be home with this correction? So we'll only know that when it actually starts showing an impulse on the way up. So that's the thing to watch out today, tomorrow. Key levels, very important ones, medium to longer term. And even in case of some of the macro factors, we are at key levels. So whether it's the USD INR knocking on the doors of 83, trying to break out of this triangular structure, or whether it's the Indian 10-year GSEC also knocking at the doors of 7.45, 7.5% at the top end of this triangle. So both the USD/INR and the bond yield 10-year GSEC knocking at the top end of a triangle. If they fail to break out, we complete topping triangle formation wave E and then roll over to the downside. If we do break out, then we have risk on, risk off all over the place, and worries come right back. So we are at the edge of these things. It would be nice to take a clear-cut call, but we are really going to have to watch these factors fall into place of one way or the other, and get confirmed breakouts, which is when we can actually say this is happening or that is happening. Very interesting times and important levels to be watching across the Indian market landscape. Thank you.